Hello viewers and my dear students, welcome to my channel. I am Hashim Ali Khan here. Presently, I am giving the lectures on the subject cost accounting. In this cost accounting, we are discussing the topic material costing. So hope my regular viewers have already watched the theoretical part of the topic material costing. So if you have not watched, please go to the playlist of my channel. I have uploaded many subjects videos on different topics for financial accounting, cost accounting and corporate accounting, advanced accounting, business statistics, financial management. So many videos I have uploaded. Select your concerned subject and watch the complete video. Definitely you will gain a lot of knowledge from these videos. Now I am discussing about the subject cost accounting. So I have uploaded the introduction part of material. First video on introduction of material costing. What are the techniques available? So go through, watch that video carefully, then definitely you can be able to understand properly the problems. Then I have solved nearly 10 short problems. And then main problem, 16 main problems we have completed. Now I am discussing the 17th problem. Hope you have already taken the printout of the problems which I have provided in the link under my description. So take a printout of the problems from the link and be ready before starting the problems. Now I am reading out the 17th problem. See carefully. The following transactions occur in the purchases and issue of material. So January 19th, there is purchase of 100 units at 5 rupees each. February 4th, purchased 25 units at 5.25 each. February 12th, purchased 50 units at 5.50 each. February 14th, issued 80 units. March 6th, purchased 50 units at 5.50 each. March 20th, issued 800 units. March 27th, purchased 50 units at 5.75 each. These are the different purchases and issues given from January to March, January 19th to March 27th. Now prepare the stock account. Stock account means stores ledger account, showing the balance on 31st March. At the end of the accounting year, our accounting year ends on 31st March, so we have to find out what is the balance of stock on 31st March. State clearly your method of pricing and value the closing stock. The new point in this problem is, in the problem it has not specified which method we have to follow. There are different methods of issuing the material, pricing the issue of material. FIFO method, LIFO method, simple average, weighted average, base stock method. So many methods are there. Now this is the first problem in which it has not specified which method you have to follow. Then by seeing the transactions we have to decide ourselves. If you closely watch the problems, you can see the prices are continuously increasing. When we first make the purchases, it was purchased at 5 rupees. Second time when we purchase, it has gone to 5.25. Third time we have purchased, the price increased to 5.50. Then fourth time when we purchase, it is 5.75. So if you closely watch this transaction, you can see the prices are increasing. Successive purchases, the prices are increasing. So there is a rule, there is a principle in cost accounting that when the prices are in increasing trend, when there is inflation, then the better method, appropriate method, suitable method is LIFO method. Last in first out method is the most appropriate method when the prices are continuously showing an increasing trend. If it is opposite, if it shows decreasing trend, follow FIFO method. Decreasing prices, FIFO method. Increasing prices, LIFO method. So first you should write a note. Since the prices are showing an increasing trend, so the appropriate method of issuing the material is LIFO method, last in first out method. That's it. Now I have prepared the stores ledger account. See, watch carefully here. Stores ledger account, LIFO method. As usual format, I have prepared date, receipts, issues, balance. Receipts 4 columns, issues 4 columns. The first column GRN, goods received, note number. Keep it blank. In real practice, we will have the number, we'll write down. But in theoretically, We just open the column and keep it blank. GRN, goods received note number. Then units rate amount. Similarly, issues. SRN, stores requisition note number. Then units rate amount. In balance, only 3 columns, units rate amount. Now you can see January 19, there is purchase of 100 units given at 5 rupees each. So 100 into 5, 500. Take the balance 100 units, 5 rupees, 500. Now February 4th. February 4th, there is purchase of 25 units at 5.25. So 25 into 5.25, 131.25. So take that balance. So in FIFO and LIFO method, we have to keep every lot separately. We should not club. All the different lots should be kept separately. The first lot was 100 units at 5 rupees, 500. Second lot, just now we have purchased 25 units at 5.25, 131.25. So 2 lots we are having in our balance. Right? Now 12th Feb, again there is purchase of 50 units at 5.50 each. So multiply 275. Now in the balance we will have 3 lots. First, second, third. First lot 100 units, 5 rupees 500. Second lot 25 units, 5.25, 131.25. Third lot 50 units, 5.5, 270. 3 lots we are having in our balance. Now 14th Feb. On 14th Feb, there is issue of 80 tons given in the problem. Now we are following which method here? LIFO, last in, first out. The third lot should be issued first. What is the third lot here? 50 tons, 5.5, 275. This we issue first. Then second lot. Second lot 25 tons, 5.25, 131.25. This also will issue fully. Now 50 plus 25, 75. Totally we require 80 tons. So 5 tons we use from the first lot. 5 tons we use from the first lot, 5 rupees, 25. So third lot and second lot completely exhausted. Out of the first lot of 100 units, 5 units we have issued. So 95 units are remaining. 100 minus 5, 95 at rupees 5 each. So 95 into 5, 475 is the balance. Now after 14th March 6th, there is purchase of 50 tons at the rate of 5 rupee 50 paisa, 5.50. It comes to 275. Now we have 2 balances. 95, 5 rupees, 475, 50, 5.5, 275. 2 lots we are having. Now 20th March, there is issue of 80 tons. It is given in the problem. 80 tons are issued. Again, last in, first out. The last lot 50 tons. This will be issued first. So 50 into 5.5, 275. Out of this 95, we are issuing 30 because totally we require 80. 80 में से first 50 निकाल दें 30. तो 30 tons at 5 rupees. It will come to 150. Now out of 95 tons, we have issued 30 tons. So 95 minus 30, you will get 65 tons at 5 rupees, 320. That's it. Now 27th March, there is a 50 tons purchase at 5.75 each, 287.5. Now we will have 2 lots. The old lot 65, 5, 325. New lot purchase 50, 5.75, 287.5. That's all. The transactions are given up to 27th March and we are closing the accounts on 31st March. The 31st March closing balance. So put dash in receipts columns and issues column, put a dash. Now balance 65, 5, 325, 50, 5.75, 287.5. Take the total 115 tons is the closing quantity and closing value is 612.5. Add up these two, you will get 612.5. That's all. This is the store's ledger. The new point in this problem is the method of pricing the material issues is not given. It is asking you to apply your own method. So we have seen the transactions, the prices are continuously increasing. So the appropriate method is LIFO method. That is the only new point. Now I am coming to the next problem, problem number 18. Bharat Petroleum closes its accounts at the end of each month. The following information is available for the month of April 1983. 1 month transactions are given. Sales 5 lakh. Administrative expenses 40,000. Inventory here means stock. So inventory on 1st April 1983, opening stock. We are given the transaction for 1 month, beginning from 1st April and ending on 30th April. So 1st April 1983, 100 tons at the rate of rupees 1000 per ton. 100 tons are there, 1000 rupees per ton, 1 lakh rupees is the value of opening stock. Then purchases are made April 10th, 200 units at 900 rupees per ton. So 200 into 900, you'll get 1,80,000 rupees the value purchases on 10th April. On 20th April, 200 units at the rate of on 20th April, there is 200 units at rupees 800 per ton. So 200 into 800, 1,80,000, 1,60,000. 200 into 900, 1,80,000. 200 into 800, 1,60,000. So purchases are made on 10th April and 20th April. 10th April and 20th April. 10th April को जो परचेस करे 900 रुपीस पर टन एंड 20th April को जो परचेस करे 800 रुपीस पर टन. Inventory on 30th April. Inventory at 30th April means closing stock is 100 tons. It has not given the value. We have to find out what is the value of this 100 tons inventory on 30th April closing stock. Compute the following data by FIFO method. What we have to find out? Inventory valuation on April 30th, cost of goods sold in April 30th, profit or loss for April. 3 questions are asked. First, it is asking you what is the value of closing stock on 30th April. Secondly, it is asking you to find out the cost of goods sold during April. And thirdly, what is the profit or loss during the month of April. That's all. So comparatively, it's very easy problem. No need to make stores ledger account. We'll make a statement. So here you can see statement of cost and profit for the month of April 1983. So 2 columns I have opened at the extreme right hand side. Sales, A denoted as A, 5 lakh. Given in the problem, 5 lakh rupees are the total sales during April. Now cost of goods sold. Remember, cost of goods sold means opening stock plus purchases minus closing stock. Opening stock plus purchases minus closing stock. What do you get? Cost of goods sold. The opening stock is given in the problem. On 1st April, there are 100 tons at rupees 1000 per ton. So 100 into 1000, 1 lakh rupees opening stock. Purchases. Twice purchases are made during the month. The first purchase was made 10th April, 200 tons at the rate of 900 rupees per ton. So 200 into 900, 1,80,000. Then April 20th, 200 tons are purchased at the rate of 800 per ton. 800 rupees per ton, yes. So 200 into 800, 1,60,000. So add up opening stock plus purchase 4,40,000 minus closing stock. Closing stock 100 tons. The value is not given in the problem. Value is not given in the problem. It is given in the problem that the business follows FIFO method. That point is given in the problem. FIFO method the business follows. First in, first out. तो जो closing stock of material जो रहेगा वो last purchase में का रहेगा. Because old stock will be issued first. Opening stock was fully issued, sold away. The first purchases was fully used, sold away. From the second purchase of 200 tons, the closing stock remains 100 tons. FIFO method, first goods received will be issued first. So whatever is the closing stock that will remain from the last purchase. The last purchase was on April 20th at the rate of 800 rupees per ton. So we value the closing stock at 800 per ton. 100 tons into 800, 80,000 is the value of closing stock. Here in working note I have given the explanation. The Bharat Petroleum follows FIFO method. So the closing stock of 100 tons remains from the last purchase. That is purchase on April 20th at the rate of 160 per ton. At the rate of 800 per ton. At the rate of 800 rupees per ton. So value of closing stock is 100 tons into rupees 800 is 80,000. So 80,000 is the value of the closing stock. Now you subtract 4,40,000 minus 80,000, you get 3,60,000. This 3,60,000 is called cost of goods sold. अब उसमें administrative expenses 40,000, we add up cost of sales 4 lakh. Then Profit is nothing but sales minus cost of sales. Profit is equal to sales minus cost of sales. So sales are 5 lakh and cost of sales are 4 lakh. So 5 lakh minus 4 lakh, 1 lakh rupees is the profit. So this is the end of problem number 18. Come on, see the problem number 19. From the following particulars, write up the priced stores ledger card according to the base stock method. So new method we are following here in this problem, base stock method. What do you mean by base stock? I'll explain you. Base stock is a stock which is kept separately for the purpose of meeting emergency situation. Sometimes what will happen, the material will be so critical. If there is shortage of material, then definitely our production will be stopped. The business will incur huge losses. So that's why always some material will be kept separately, so that that separate material can be issued only during emergency period. So normally that stock will not be touched. So keeping it separate, the stock over and above base stock will be utilized, will be issued. So in this problem we have to apply base stock method. A stock which is kept separately to be used only during emergency period. So when it operates in conjunction with FIFO method and LIFO method, base stock is 200 units. So actually base stock is not a separate method, but it's a method in which some material will be kept separately. That is the base stock. And this base stock can be used with any of the methods, whether the method is simple average, weighted average, or FIFO method or LIFO method. In this problem, it is saying that we have to prepare the stores ledger account according to FIFO method and according to LIFO method. The base stock is 200 units. So data is given for the month of January. January 1st, 1986 purchased 500 tons at 2 rupees per ton. January 10th purchased 300 tons at 2.10 per ton. January 15th issued 600 tons. January 20th purchased 400 tons at 2.20 per ton. January 25th issued 300 tons. January 27th purchased 500 tons at 2.10 per ton. And January 31st issued 200 tons. These are all the transactions of purchases and issues given in the problem. Right? Now, see here. Stores ledger account FIFO method. First we follow FIFO method. Base stock is 200 units given in the problem. In the problem itself, it is given that keep a base stock of 200 units. Now, format, there is no change. Date, receipts, issues, balance. Same columns I have taken. First, January 1st, 1986, there is a purchase of 500 units at 2 rupees each. So 500 into 2, you will get 1000. Now from this 500 units, we are separating 200 units because it is asking you in the problem to keep 200 units in base stock. So out of this 500 units, 200 units I have kept separately in base stock. Next 300. So I have segregated 500 into 200 plus 300. So 200 units, 2 rupees 400, 300, 2 rupees 600. Now I am not going to touch this 200 units. Over and above this 200 units, I am issuing the material, right? This 200 units is the base stock. Now 10th January, there is a purchase of 300 units at 2.10 each. So 300 into 2.1, 630. Now we are having 3 separate lots. The first 200 lots is the base stock. Next 300 lots at 2 rupees each, 600. Now, just now we have received 300 units at 2.10, 630. Next date, 15th Jan, there is issue of 600 units. In the problem it is given there is an issue of 600 units. We are following FIFO method, first in, first out. So keep it separate, this base stock. Don't touch the base stock. Don't touch the base stock. So over the base stock, 300 units, 2.00, 600 and 300 into 2.10, 630. So 300, 2 rupees 600, 300, 2.10, 630. Both we have issued. First we have issued this 300, 2 rupees 600. Secondly we have issued 300, 210, 630. Now the remaining balance will be the base stock. What is the base stock here? 200 units, 2 rupees 400. On 20th Jan, there is purchase. There is purchase of 400 units at 2 rupee 20 paisa, 2.20. So 880 is the value of purchase. Now the balance is 200, 2 rupees 400. This is the best stock. Plus now purchased 400, 2.288. Now on 25th there is issue of 300 units given in the problem. So this 300 will be issued from this 400. Because best stock we are not touching. So 400 minus 300 is 100. So 2 rupee 20 paisa 660. This is the value of the issue. Now balance 200 best stock as it is. 400 minus 300 is 100 units, 2.2, 220. On 27th there is purchase of 500 units. 500 units at 2 rupee 10 paisa, 2.10, 1050. Now the balance will be this 200 and 100 are coming from the previous balance. Now purchased 500. So 200, 2 rupees 400, 100, 2.2, 220, 500, 2.1, 1050. 3 lots we are having. One base stock and other 2 stocks. Now 30th Jan, there is issue of 200 units. So how to issue 200 units? We are following FIFO method, first in, first out. Keep it separate, this base stock. Don't touch the base stock. So this 100 units will issue first. So 100 units into 2.2, 220. Then from this 500, I am issuing 100. Because totally I have to issue 200 units. So this 500 units I am utilizing. From this 500, 100 units I am utilizing, I am issuing. So 220 and 210. So 220, 210. Now balance. This 200 base stock will remain same. This 100 units already issued. Out of 500, 100 units are issued. So 400 remaining. So 400, 2.10, 840. That's all. All the transactions given in the problem completed. Now we'll take the balance. 31st January closing balance. The balance column, this 200, 400, same. 2 rupees, 2 rupee 10 paisa. 400, 840. So total 600 units. The value is 1240. This is the stores ledger account according to FIFO method in conjunction with base stock of 200 units. That is the new unit. Now the same problem, it is asking you to follow LIFO method. Last in, first out. Same problem. Now we'll follow LIFO method and see what is the difference in value of closing stock will occur. Stores ledger account LIFO method, base stock 200 units. Same format, 1986 January 1st, 500 units are purchased, 2 rupees 1000. Now I'm segregating 200 and 300 because base stock I have to keep it separate 200. So 200, 300, exactly similar to the previous one. Then 10th Jan there is a purchase of 300 units, 2 rupee 10 paisa, 630. Now I'm keeping separate 200, 300, 300. The old balance was 200 and 300. The new lot purchased is 300 at 2.10. So these are the balances. Now 15th there is issue of 600 units. On 15th Jan there is issue of 600 units. We are following LIFO method, last in, first out. So last में जो receive करे 300, that will be issued first. So 300, 210, 300, 210, 630. Then this 300, 2 rupees 600. Now balance remaining is the base stock, 200 units, 2 rupees 400. Next is 20th Jan. There is purchase of 400 units at 2 rupee 10, 20 paisa, 880. Old balance was 200, 2 rupee 400. New lot purchase 400, 2.2, 880. Now 25th, there is issue of 300 tons. So 300 from which lot? From 400. From 400 I am issuing 300 at 2.2, 660. So balance this 200 remains same. Out of 400, 300 I have issued, so remaining 100. 2.20, 220. Next one, 27th Jan. There is purchase of 500 tons at 2.10, 1050. Now I am having 3 lots. Last balance 200 and 100. Now new balance 500. So value 400, 220, 1050. The last transaction given in the problem is 31st Jan. There is issue of 200 tons. There is issue of 200 tons. Now we are following LIFO method, last in, first out. तो लास्ट में रिसीव करने वाला 500 है, तो ये 500 में से 200 issued. Out of 500, 200 issued. At what price? 2.10, 2.10, 420. So first lot 200, base stock 200 remains same, then 100 units remain same. Out of 500, 200 issued. So 300, 2 rupee 10 paisa, 400, 220, 630. That's all. Now closing balance. The closing balance is 200, 100, 300, total 600 units is the closing quantity, and closing value 400, 220, 630, 1250. This is the closing balance as per LIFO method. Now you can compare it. As per FIFO method, the value comes to 1240, 1240, whereas according to LIFO method, the value comes to 1250. The value will be slightly different according to the methods. So in this problem, I explained you about the base stock method, how the base stock will be dealt. I explained you what do you mean by base stock. It is a stock which is kept separately, meant only to be used during emergency period. Till that time, we will keep it separate. Over and above the base stock, we will make the issue. That's all. So this is the conclusion of this problem number 19. If you are satisfied with my lecture, give a like to the video, share it, subscribe it if you are not subscribed, and give your precious comments. I'm waiting for your comments.